Welcome to the Australian Business Show. Today we have the privilege of interviewing Brett and Nev, the visionary founders behind Finex Wealth, a fintech company revolutionising wealth management through innovation and strategic capital partnerships. With Brett's extensive experience in capital raising, combined with Nev's expertise in strategic global investments, they're shaping the future of wealth advice here in Australia and beyond. Get ready for a conversation packed with insights, strategies and real-world lessons from two leaders who are truly rock stars in the fintech space. Brett and Nev, welcome to the Australian Business Show. Thanks very much for being here.
Thank you for having us.
Thanks, Nick. Cheers.
Yeah. It's bit of a rapid fire one for us, isn't it? We only met a couple of weeks ago, and I said you blokes should come on this Australian Business Show because I think you struggle to talk though, really, don't you? You haven't got much to say, you blokes.
Well, this is our second date. The first one didn't go too badly.
That's true.
Yeah. So we've escalated it.
So we thought at least we can have another crack.
Well, we did a bit of background on your team, mate. So
Yeah.
quality control before.
So we might do a two-way interview. All right, we'll see. So the guys from Finex Wealth, 4+ years old now. Yeah. And I want to talk a little bit about obviously your investment strategy and because it's a fairly crowded market, I would suggest that you're in, right? And so to do what you're doing, you're going to have to do something a little bit differently, I would have thought. And so I think we'll talk a little bit about that. But Brett, with you've had a fair amount of experience in business acquisitions, wealth management, financial planning, those sorts of things. Tell us a little bit about that and how you came to be here now.
Not so much in the business acquisition side of things, but certainly in the wealth planning and the financial planning side of things. So in terms of where we've come from, had a really keen interest in finance from an early age.
Yep.
So I actually did work experience. This will be a fun time for you. I did work experience at the stock exchange when it used to be Open Outcry, which was in its 365 or 45
paper tickets and everything?
There was paper tickets and there was a guy there who was working the old chalky board by the name of Stephen Kernahan, and I'm a massive Carlton fan. And this was on a work experience day. And I went, shit, I wouldn't mind doing that job. This looks like a lot of fun. So sort of followed his career, and he didn't stay long in that job, but I really enjoyed the cut and thrust of the stock market. And from that point in time, I was quite transfixed on markets and how they work and the background of that. So, and it seemed like a really exciting career. So from that point on, it was my intention to get into it. But it was around about the time of getting out of school, which was at the time of the last recession for me personally. Yep. And at that point, you just couldn't get a job in that particular area. It was impossible. So I went back and I studied and I finally got into it and started working in finance at that point at a very low level. So you might be surprised to know I actually started in the mailroom at a place called Potter Partners at the time. And Potter Partners
sounds like the start of the plot to a movie.
Probably had 10 different name changes over time, and Potter Partners all through that time became UBS. Okay. So they were taken over. They had different name changes throughout that period of time, and I survived all that period. So, but I stepped my way all through that business.
Yep.
To become a trader, call it a trader, or I sat on an international markets trading desk, and learnt all about trading the share market.
Over how many years was that?
That took me from delivering mail to the CEO to actually sitting on that trading desk. Took me a combined period of about 10 years.
Yeah, okay.
So I just worked my way through I
always find it interesting because young people these days want to start a job, and I know I'm generalising, it's a bit of a sweeping statement, but start a job, and if they're not running the show in 6 months or 2 years' time, they sort of move on and look for the next thing. And, I like you, I spent 7.5 years working my way up in a business working for somebody else until I ended up in my own entrepreneurial journey. But is there a right and wrong? I don't know. I just know that it's hard to fast track the skills and the learning that you get through working your way up in that.
It helped me immensely to go through all those different areas of the business because it enabled me to get an understanding of all those areas, but plus it helped develop a really strong network within the UBS organisation. And UBS opened a lot of doors for me once I left there. I must say it was, as a grounding, it would be hard to try and replicate these days what I did, and that's just the way the industry's transformed over the years. But it was a great grounding for me personally.
Yeah. And Nav, yourself, again, extensive works for some pretty big firms.
Yeah, so not too dissimilar to Brett. In terms of a passion, I love investing. I love making money. And I started from a very early age, so when I was a teenager essentially. And I remember my first share I bought was Westpac, and I've still got the share certif with me to this day.
You still have the shares?
No, I don't. That's a different story.
They're not growing quick enough for us.
I've gone on to bigger and better things, but from a very early age, I think the interest in investing in markets really helped me.
Yeah.
And we're not too dissimilar in terms of age bracket. So I went through the recession we had to have. Mr. Keating.
Thank you, Mr. Keating.
Remember the famous comment? So essentially, I couldn't get a full-time job and in markets. And what I did was I ended up in the pharma industry, completely different. My mum was a GP, and so that led me to a completely different
What, selling?
pathway.
Selling?
Yeah, selling drugs. Selling drugs legally.
Yeah, legally.
But it was, what it did teach me was just the immense importance of sales skills.
Yeah.
And it was just second to none. So I got a really good grounding there, the importance of preparation, knowing your material, because I came from an economics and finance background.
Yeah.
I'm in the pharmaceutical industry, healthcare, very different. But I had to technically get up to speed very quickly. That was great. And this is, my story is probably a story of serendipity too. So through people, just connections in my life, I ended up getting a break in the mid-90s through, it was ANZ McCorns. No longer around, it was part of ANZ Bank.
I actually did my work experience through ANZ McCorns.
Everyone's been through ANZ McCorns
Right.
at some stage. Yeah. But they are a relic of ANZ Bank, long gone. I didn't last long there because ANZ divested McCorns and there was no buyer, and half the place got made redundant basically on the Monday. But again, serendipity, I was able to piggyback off the back of the team that I was with. So when I was at McCorns, it was a institutional desk, it was a trading desk, derivatives, which is options, warrants, and I was in one of the most profitable parts of McCorns' business. And I was based in Sydney at that time. And then there was a group of about 8 of us that went to Credit Suisse, and one of the guys there, who to this day is a very good friend of mine, said to me, "Do you want to come across with us?" And I thought, look, I've got no real career options. I'm the last in through the door, probably the first out. So I went to Credit Suisse with these guys, absolutely fantastic, and I learnt so much from them. Some of the smartest people I worked with were on that desk. So it was a massive desk overlooking, and my views for the first week, you sort of ignore the views after about the first week. I had the Opera House on my right-hand side, the Harbour Bridge on my left-hand side, and that was my view for probably a good 6.5 years.
What's your view today?
Not as glamorous.
So that glamorous world of working for yourself and all of that sort of stuff.
It used to be an Australian Post distribution centre for a while, but anyway.
Yeah.
But
a bit from that.
From there, this was sort of very early 2000s, got married, had a daughter. We were in Sydney still. My family's from Melbourne. We moved back to Melbourne, joined ABN AMRO at the time, which is where Brett and I joined at the same time, March of 2004, to be precise.
Yep.
And then sort of collaborated on a few clients, and then in 2010 we formed our own business, and at that time that business went through some transitions. We went through the global financial crisis. That business probably got sold about 2 times over. It became part of, it was RBS Morgan's Financial.
Did you roll, so as part, I'm interested too, because a lot of the people that we talk about mergers and acquisitions, and we talk about growth and strategies, and talk to me about, I'm interested to hear about that transaction, I guess. How did they value the business? into what mechanism, what formula did they use? These days we all talk about multiples of EBITDA.
Yeah.
But that kind of business to me strikes me as a different valuation model.
Yeah, look, we were pretty far away from it because that's a global transaction, and we went. And it also, when you're talking about all these things, that's really important. But it's also a cycle in the market. So when you take that transaction where RBS purchased the ABN AMRO business, which is ABN AMRO's one of the biggest global Dutch banks there was, that was at the height of the market before the GFC. So they overpaid for the assets. And I mean, that business, globally, they had a $100 million private art collection, for example. Wow. They had all these things, right? And you're talking a bank that's been around for decades, if not over 100 years or more.
Wow.
So it was quite incredible. And then the GFC happened, and then they're 80% owned by the British taxpayer as a part of the bailout. Yeah, okay. And then we were sort of victim to that, because then they said, oh, look, you need to divest your non-core assets globally. And Australia was a non-core asset in terms of the business that we were in. And so that got divested, and Morgan's Financial, which 50% owned that RBS and ABN AMRO business, purchased the other 50%. And then we formed a...
It became staff owned for 50% at that point.
We did, yeah. And then we, in 2010, we moved out of Morgan's Financial, but still working under their license in a branch in Richmond. So it's like a franchise. And then we went through this transition where our business just changed dramatically over that period to what we evolved to with Finex, which is a big move in itself.
The sales background, so to me, I think sales is probably, if you're going to be an entrepreneur or a business owner, sales experience coming up through that apprenticeship, if you like, I think is one of those skills that will pay dividends enormously in terms of wanting to own and run your own business, because everybody's in sales. If you work in a business, you're in sales, whether you own it, whether you work in it, whatever, because you're interacting with customers, you're selling each other, you're selling your colleagues, you're selling, we talk about manipulation being a bad thing, but, we do it from the day we're born,
Absolutely.
Yeah. And so I see, and again, did you find then your transition from going from working for somebody else to working for yourself, did you find that set you up by having that experience of selling, the courage to walk in and have those conversations? How's that served you?
Yeah, it's interesting. You raise a few points in there, but let me sort of address that sales side firstly. So when I'm going back to my time in farmland, there's a lot of analytics that go through. You don't realise this. Different companies do this at different levels. In my experience, you segment clients, you target markets. It goes right down to how many times you call on a client in a given period, then correlate that to the products you're trying to actually promote to a client, coming down to the detail aid, and then the pages that you're hitting and the messaging that you're trying to convey. So fast forward to where we are now, it's no different. So we will segment our clients according to potential. We have a pipeline. We also segment according to that. How many times we contact the clients, etc. So,
where do I sit in that pipeline?
Well, early days.
Early days.
We're trying to push you through the pipeline pretty quick. Then
lots of potential, though. Lots of potential. But you look at some of the technologies that are around us, like the CRM systems, like a Salesforce, and we use Salesforce for our CRM system. There are plenty of other CRM systems out there too. But you can really customize and target that process to drive efficiencies in your business. So it's all about, but then the raw side is it's about getting on with people.
But you wouldn't have had a CRM when you were repping, would you?
CRM was a piece of paper which was basically like a card, alphabetically stored in a little box, and I would color code those according to customer importance. Yeah. But the idea was it was a continuity, and then we moved on to a very basic computer-based system where that was there, because then if you're in a team, your team members know what your colleagues are doing, in that sales call process.
But this is, I guess this is my point about, I think, the apprenticeship and the skills that you learn as in sales is the discipline of that. Even today with CRMs, you still have to have a discipline to put the right information in, to remember to do it. You know, we've got AI starting to help us a little bit with, you know, recording our conversations and transcribing and all that sort of stuff. Brett, so you guys decided to start Finex Wealth together.
Yep.
How was that step for you? How did you to go from the security of a wage, working for somebody else?
It was more of a licensing point of view. So Morgan's essentially was the licensee that we were working under at that point in time. But at the same time, when you're in that situation, they essentially run. You're working under their regime, if you like. So it's their rules. It's their software, it's their systems, it's their compliance. For us, it was more about, okay, what do we actually want the business to look like? That was the most important aspect of it. And could we run it under someone else's license? And when Nev and I went away and started talking about this, and we actually hired, still to this day, we remember this particular lady. She worked at Macquarie Consulting. And she probably changed our complete mindset. And Nev and I could see where we wanted to take the business, but really it was a matter of how are we going to get there, and who do we need to assist us in what that looks like. So we hired this particular lady from Macquarie Consulting, and she was
Libby.
She was great.
Libby's her name, yeah.
And she came in and basically said, "Guys, stick or carrot." And we said, "Well, give us the stick because we just want to be hit over the head. And just tell us what we need to do," and completely transposed our thinking just in terms of, okay, if this is what you want the business to look like, how have you actually determined how you're going to get there? And we hadn't really thought about that to a great deal of detail. And when she started walking us through that process, our whole mindset changed in terms of we've just got to completely turn this thing upside down. And that's what we did. So it came to that point where it was based on what she was talking about and where we wanted the business to go to. Was that going to be under the existing licensee and their rules, their regulations, if you like, or the alternative, which is essentially having your own independent license? And it was at that point we went, well, this is a no-brainer. It's got to be independent licensee. And us to get to that point, though, took us still a number of years to actually get there because...
Is that an AFSL?
That's correct, yeah. AFSL, which is Australian Financial Services Licence, which you need in order to provide advice to a client here in Australia. To get to that point was actually still a long way down the track. So, but she pointed us in the right direction, and then it just came down to Nev and I getting off our tails and doing it. And that was a process. It took us 2.5 years.
Yeah, and expensive too, isn't it?
It's not as expensive as the expense is there. Yeah, it's not free.
Yeah,
but it was more the time cost.
Yeah,
as much as anything. You have to really commit to the process. And a lot of people
they do a series of interviews with you.
It's not necessarily that. It's more to getting the proofs together that you need to put towards the licensee application.
Right.
That's a lot. They turn you inside out and outside.
Right.
They just want to make sure that you're the right people to be providing advice in Australia.
Yeah.
And it's a real process to go through that. But once you've got that tick of approval, from that point on, your license is granted and off you go.
Are there different types of AFSL licenses?
There is, yeah. It depends upon what you want to actually advise on. So you can have it very minimalist. So if you want, for instance, in Australia, if you want to provide the advice around providing a mortgage, that's a credit license. So we don't have credit on our license. We just have advice. But yeah, there is different types of license depending upon the type of advice.
Yeah,
correct.
Wholesale licenses, for example.
So we wanted to make ours. We wanted to make ours bespoke to what we wanted to provide.
Yep.
So in that instance, we got rid of things like insurance. We don't have derivatives. We don't have credit.
Yep. Yeah. Okay.
So it was very specific to what the advice that we wanted to provide, which is generally wholesale.
How did you come to make the decision that you wanted to start your own business?
That was relatively. Well, I'm going to say it was relatively easy, but I'm probably not painting the full picture. We could have gone exactly the same way that we were doing business. But the problem with that is, and this was the strategic review that Brett was alluding to, it was a downward spiral. So our existing business at that time was a transactional-based business. We would buy and sell shares. We would transact on option products, on warrant products, etc. We had a small insurance book. We did a lot of different things. The strategic review was about the value we wanted to create for ourselves, plus also for the clients. And then what that value proposition was. So the external consultant was really crucial in helping us define that. We had to do the work ourselves, because most people, when you hire a consultant, they sort of go, "Oh, look, they'll do all the work for you." But this is your business. You've got to roll up your sleeves and really get in there, because it's about you at the end of the day. And so it was about creating something that we really wanted to over the next, say, 10 to 15 years. It was a downward spiral, Nick. It was based on transaction volumes, which were going down post the GFC. The trade ideas are going down. You look at the number of investments that you can buy. I'm talking good quality investments in our market, in the Australian market. They were narrowing. So some of the companies that we used to trade on, News Corp, for example, no longer there. It's listed in the US. Sydney Airports, SP AusNet. There's a multitude of companies, really good companies, that are no longer there. So that we just sort of felt the ideas were narrower and narrower, the trade size, trade volumes, etc. So we turned it on its head, and that took us probably a good 3 to 4 years of planning, plus also going on our own. It's not just a license; we had to outsource everything. So,
explain what "turn it on its head" means.
So we had a vision for the business, and part of that vision. Not part of it, a lot of it was client-driven as well, because we were working for, at one stage ABN, RBS, etc., Credit Suisse, Morgan's Financial. It's very much a domestic offering at the end of the day, and the license sort of dictates that too. Yes, you can buy some Apple shares overseas and stuff like that, but most of it's a domestic offering. Where we saw the opportunity was a global investment process there, which we could apply with clients. So our clients at the time were saying, "Hey, can we participate in an IPO in the US or in Europe, or can we get this venture capital opportunity?" And the answer was no, because it was outside the purvey of the license. Plus, even getting your hands on those opportunities, you couldn't really do it, right? So we saw a massive opportunity there. I've been investing personally in overseas markets, since 2000. So we brought all of that IP together. Today we produce our own IP. So the client value proposition really was a massive gap in the market to invest globally, but provide the advice around that. And it's not about being able to buy Microsoft in the US. It's about the reasoning behind that, and we spend a lot of time on that. But then the other plus for us is through our relationships, and we've been in markets for nearly 3 decades, each of us, we've been able to get some really good, relationships and develop those. So we're able to, and as an example, we've been able to participate in certain IPOs on the NASDAQ. We did that. One of the main holdings that we had was ARM Holdings. We were the only firm domestically that had broker firm stock allocation in that.
Is that relationship driven?
Absolutely.
Yeah.
It's 100% relationship driven. Yep. Our clients also invested in a venture capital opportunity in the UK. Now, these are not for everyone. These are wholesale type opportunities. Yep. So we've niched the business, but that is the main point of difference. No one domestically is able to offer the depth of service that we can to clients, and we're competing against the big guys. You walk down Collins Street, any of those big names, private banks, etc., we're competing against them directly.
I noticed and it struck me because on your website you've got your values, in honesty, integrity, trustworthiness. I'm going to test you because I've forgotten the rest. There was one more.
Excellence.
Excellence. So this is real. This is the real world, right? Mm-hmm. But it resonated with me because actually in our businesses, honesty and integrity are the first 2 pillars that we have too. We talk about being hip, honesty, integrity, people, and passion. Yeah. I think when you're dealing with other people's money and their futures, they're 2 pretty significant pillars of values, and so how do you demonstrate that when you're talking to a customer, a potential customer, because everybody's going to claim it.
Yeah,
it's common on a website, right?
Yeah, 100%.
So, and when you're talking about money, everyone says we're honest. Who's going to put the dishonest on the website?
I'm dishonest. Give me your money.
So it comes down to really the relationship you have. A lot of it as a result of the fact that you've been referred from someone who has been able to be within our service for a period of time and has the comfort to actually refer them through to us. So that provides a little bit of background from that person. And that's, when you were saying how to exhibit it, it's very hard on a first meeting because you can't really. But it's more from the building up of trust that we've had from an existing client that's referred us through someone new. That generally tends to be where we can strike that.
The referrals, the testimonials.
Yeah. I think the other thing is we're big believers in walking the talk, right, at the end of the day. The demonstration of those values really comes probably when something doesn't go well, something goes wrong. I'll give you an example. In the last week, I was supposed to do something for a client. I had 5 things to do on the list, all investment related, and I had a brain fade. We all do at times. I did 4 out of the 5 things, and the client came back to me and said, "Oh, look, I thought we agreed to do that." Absolutely, we did, because we talked about it. I sent an email saying I'd do all these things. Now, it was, and I said, "Look, our stuff up, we'll fix that up." Now, it was going to cost us money. The money aspect is not the important thing, but we fixed that up, right?
That's the integrity.
That's the integrity part of it. Like we're really big believers in that. This is the most important thing that we do for our clients. They put a level of trust in us, and you've got to look after them. I actually value my clients' money more than I value my own.
It's interesting before we go off that point, because one of the aspects of when you become a seats operator, which is having a license to actually trade on the market. It's quite a process you had to go through, and I worked up to that stage when I was working at UBS. And the very final motto when you finish your exam in that process is what's our creed? And our creed is my word is my bond. And that sort of stuck with me throughout my entire career. If you say you're going to do something, then you do it. And often people will say that, but of course, until you demonstrate it, it's just a group of words, right? So that's one thing that sort of always struck with me is my word is my bond. So that's tend to be how we live our lives.
I think the other thing too is, Nick, you were there at our conference.
Which was excellent, by the way. Yeah,
no, thank you for
excellent
that.
Couple of days.
We were sure you were going to have the whole podcast about our conference, mate, but here we are.
Yeah.
Off on a different scale.
Yeah.
But as an outsider, I'm interested probably in your view. What we were trying to convey was a level of warmth, and we had, there was a lot of our existing clients, and obviously you're not a client yet. I'll say yet, but observation, and this is the feedback we got from other people, was how relaxed and how warm it was compared to a lot of.
Well, I think
I'm interested in your
the
sort
box
of perspective.
ticks. I think your wording describes it perfectly. Warm, welcoming. Wasn't stuffy. It wasn't trying to be something that it wasn't. It was trying to be add value, give value. I guess good speakers, a good group of people. It wasn't. You didn't stuff the room full of people to try and make it look like. I just think it was real, and you got real value out of that. And there was some great people there, and I've made a couple of good contacts out of that as well. So, which I imagine was another element of what you wanted to achieve out of it, is bring like-minded people together.
And a lot of what you're saying is how we try and do business with all of our clients. That connection is so important to us. We're not 9 to 5 people. We're not Monday to Friday people. We have conversations, with our clients, who after a while we call our friends. It can be 9 o'clock at night. It can be on a Saturday or a Sunday. It doesn't like to us. It doesn't really worry us.
Well, we've been invited to bar mitzvahs, birthday parties, weddings.
We have been to a funeral or two, unfortunately, as well.
It's all about building up the relationships over time.
Yeah,
that's the sort of the trustworthy part as well.
To me, that's one of the things about business that I enjoy, is the relationships that I get to build. And I've built some great relationships over the years. Some of them I still have, and some of them I don't, because you the world ebbs and flows, and you come together for a period of time and whatever. But to me, that's one of the more satisfying things of business, is the relationships that you get to build. Speaking about honesty and integrity, and there's obviously a lot of regulation around fintech, and so how do you walk that line without stifling innovation and without I would imagine you could do all sorts of things, but your values will dictate that you don't. And how do you not?
Values is one thing. ASIC as the regulator is the other thing. So you need to be aware of that. So we are governed fairly strongly by our friends at ASIC. So, for instance, we're not allowed to call ourselves independent. Really cheap half-page ad in the Sunday Age. And we got this at the last minute, and it was very prominent, and it was fantastic. And most of the calls we were getting not most of the calls, but some of the calls we were getting were from other advisors within our network saying, what's all this about? How come we're not invited? How come we didn't know about it? And they were like, this is our IP. This is what we're bringing to the table.
It's our own initiative.
Yeah. So you're not involved.
You're off.
So these are the sort of roadblocks you get put up with
Interesting.
when you're dealing in a larger organisation. And it was certainly not necessarily one of the things, but it makes a difference when you can step outside of that and see the opportunities that you have that those sort of licensees really hold you back from being able to really explore getting the right clients into your business straight up, being able to run things like conferences and marketing. You couldn't do that under that particular banner.
But even operating the franchise at Morgan's Financial, we were in Richmond, there's geographical sort of footprints that you have to adhere to. Now, our clients were Australia-wide, and they still are. So we didn't want to be restricted to the postcode of Richmond or Cremorne, which is where we were. But we ran up against roadblocks with that too. Today, totally unencumbered. We can, our clients are Australia-wide. We've got some overseas clients too, mostly expats. But it allows us to really scale the business, to grow the business and think nationally at the end of the day.
Money and financial markets can move pretty quickly, but it's still fairly structured, I would suggest. And so your business is, what have you found has been some of the learnings as you've grown in terms of business structure that serves you to be able to scale a business? Because where do you want to be in 5 years' time? With that old question,
we've thought about this a lot.
We're talking about this on the way here.
We'll get around to I'll let Nav sort of talk about where we're going to be, because we have actually just put together a budget, and we were talking about it in the Uber on the way here. So, but in terms of the structure of the business and what we were trying to do, one of the things that was key to us was enabling our clients to be able to invest alongside us and our ideas. And there's no way we could do that without having the structure that we currently have. So if we tried to do that somewhere else, Morgan's where we were at the time, they just wouldn't allow you to do it. And by that I mean it was us putting together essentially our own fund, if you will, which is called an MDA. So we now have 5 of those. We couldn't do that under the previous structure. So to be able to have the clarity to be able to go out there and position that, and it's really the outcome that clients are looking for. Because most people are saying, well, I want to invest where you're putting your money, Brett and Nav. Tell me about that. And when you start talking through that process and how we actually go about it, it's a lot easier than just saying you need to buy X, Y, and Z. So it was around the structuring of the business, how it looks, and getting the opportunity to put that together has changed our business entirely, because it enables us to really scale it out. But we don't want, and we've spoken about this plenty of times before, we don't want hundreds of clients because we can't service them. So we know exactly where we want to take the business in terms of the number of clients and how that looks, and I'll have no sort of talk around that. But there's only 2 of us, and we don't really think that we need to grow out to have a room full of advisors under the Finex brand. Put it that way.
I think in terms of the offering too, it comes back to that competitive advantage that we've got. So today you can choose. You can go up and down Collins Street or talk to anyone, and yes, you can buy some shares. They'll asset allocate you, all the stuff that's important, right, in terms of an actual process of asset allocation, etc. But again, where the gap is it's in the advice component, right? And we've got clients that are clients of other firms that they will come to us and say, hey, my advisor told us that we should be investing in, NVIDIA or Broadcom because I get some exposure to AI. That's great. But can you tell us where that AI market is now? Can you tell us where it's going to over the next 5-10 years? Can you tell us what AI is? Can you tell us what a large language model is? The semiconductor manufacturing process, right? if your advisor can answer some very basic questions, fantastic, you've got a good advisor, right? But if they can't, you're giving them your money, they're charging you a fee for that. You can do that online. Why are you paying for that advice when you're not actually not getting a really deep level of knowledge and advice?
Yep.
So the key thing for us is it's that why, right? We take the clients through a journey. So coming back to where we want to be as a business, we want to be seen as the preeminent sort of service provider from an advisory point of view in this space. And where we invest our money, it's not in, getting other advisors or taking people out to golf games and stuff like that, even though we enjoy that. It's more in the research capabilities of building our knowledge base out. It's also in the relationships in getting those really great opportunities which a lot of domestic people can't. So, for example, we bid into the CoreWeave IPO in the US, which was, 3 months ago. We bid for several. There's a few other IPOs and stuff. But again, that's just product, right? There's a linkage and a process. So it's not just about getting an access to an ARM or a CoreWeave. The reasoning behind that is far more important as to how that construction, how we go about constructing the portfolio. And that's reflected in the returns that we're getting as well for our clients. So most people tend to focus on returns. And they'll, if we get new clients, I'll say, look, what are your returns? That's a function of everything that we do. And if you're just focusing on the returns, it's a very binary outcome. During good times, you're going to be loved. When times go bad, and they will, you're not going to be loved. And
that's all they're interested in, though, aren't they? I mean,
it is.
I know you have to find a different way of delivering that service. But at the end of the day, they're like, all of that's great. You can be the nicest guy in the world, but if you're losing me money every week, you're not keeping my business. Mm-hmm. So you've got to deliver as well.
Absolutely,
yeah, of course,
absolutely. Yeah. But the whole thing, Nick, for us is it's about the immersion process of what we add. So one of the things at the conference which we bring, which we said to clients is, you're investing being here. Now, yes, clients did pay for that, to be there. It's not the monetary investment. You're investing the most valuable thing, which is your time, right? And then what you get for that time and the connections that you got out of that conference, right? So there's probably 5 or 6 value-added things that we provided to our clients and the attendees of that conference, which goes far beyond just focusing on a binary outcome of is it a positive return or a negative return. But the return ultimately is a function of all those other things that we put together. But if you can be involved in the process, it creates a far better client outcome for you and our clients by doing that, because there's a lot you can't control. Like, honestly, tomorrow, flip a coin if you think the market's going to be up or down, right? I can't control that. But I can tell you in terms of the process of why you're invested and how you're invested, what the outcome is going to be with a high degree of probability, maybe over a 5-10 year space.
And we've said this a number of times during the conference, didn't we? It's not about looking at the next quarter or the next half year. It's about looking at where are the drivers of growth for the next 10 and 20 years. Yep. And it's hard for people to get their head around that, but I think during the conference we did a pretty successful job of outlining where we see things.
Yep.
And that's where you're talking about returns. People will judge you on the returns, they always do, but when they've got an understanding of what the roadmap looks like, that return equation and that commentary you might have with people, it's lessened to some degree because they can see, okay, well, I can understand where the guys are trying to take me here. There's going to be periods where we know that we'll probably go through periods where we don't perform that well. But that's markets. I mean, like Nav said, we can't do much about that. It'll come down to what asset allocation we look at that point in time. But in terms of the equity allocation, it'll be where that growth is. There's going to be periods in the business cycle where we don't get the performance that maybe some people are expecting. But we've got some pretty good runs on the board to this point. So
I think as a client, on balance, you'll be pretty happy with the over the 4 years if you've been with us.
Well, I think
didn't even talk about the performance actually at the conference either. So.
No, you didn't. You didn't, and it's easy to, especially when it's good.
Yep.
It's
it
easy
cuts
to
both ways, as we've always said.
Yeah. So you've got to be able to talk about when you're performing and when you're not, and why not. And
correct.
So that you take people on that journey. But I think one of the other things you said that I like, and I think this is a this is a structure that you should put into any business that has a customer, which is just about all of them, is what is it that you're actually delivering rather than just a service. It's the value add, it's the wow factor. For me, it's that it's 10% more, not 10% less.
Yeah.
You know, and in that you're delivering the results. Generally, correct me if I'm wrong here, but I'm willing to bet that because you take that approach, you probably also generally get better outcomes because it's collaborative. You're educating the customer on the decisions they're making. So they're making decisions. They're not just going, oh, okay, Mr. Advisor, that's okay, stick my money there and let's hope for the best. You know, they understand why you're doing it, the journey.
I think a key word you mentioned there is collaborative. It has to be a collaborative approach, right? It's no good, say, for example, you coming to us and then us delivering you a set of investments or whatever and giving you the answers to that. Without that,
unless it was an amazing, I'd be happy with that. I'll give you $1 million. You give me 10 back. I'm happy.
Yeah.
But it's the collaboration that drives a great outcome, right? At the end of the day, and think of it this way: you're giving your hard-earned money to someone, right? For that advice and the management of that money, you should be taking an interest in that. And that's a really hard thing. I'll give you a completely different analogy. When I took my kids to school, we did a lot of learning at home, right? Most of the learning was at home with our kids, values, all those sort of things, right? But there are some parents that go, oh, look, I'll just drop them off at school and they get taught at school and it's the teacher's job to teach them.
Yeah.
It's that sort of, and the reason I put those two different examples is from a finance point of view, if you're giving your money to someone, you should be taking, that's your hard-earned, you should be taking an interest in that, finding out not just what they're investing in, but the why and the process behind that. Now, some of it may not interest you, right? But if your advisor is good, they'll be able to position that in a certain way that, that condenses that for you, but you still understand it.
We're in an interesting market at the moment and have been for a little while. There's a lot of money to be made. There's a lot of money to be lost. It ebbs and flows pretty quickly, and we've got lowering interest rates. And I was talking to the bank the other day. My particular bank are pricing in 2 more drops before the end of the calendar year, and to me that's nuts. I don't understand why we need that, but I just think we're going to create a bigger problem for our young people in terms of property values and those sorts of things. So, what's the advice that you'd give to business owners right now in the market with the volatility that we see, the uncertainty that we see? What's the piece of advice that you'd give to that?
Oh, there's probably a couple. So Nev and I are pretty much on the same wavelength when it comes to this sort of stuff, and that's because of the fact we do have a very similar philosophy when it comes to investing. It's always there's never a perfect time to invest. I don't think there's ever been a perfect time. So there's always something that bobs up, whether it's tariffs or whether it's interest rates or whether it's lower GDP or it could be anything. The piece of advice I would generally give to people is stay the course, because over time, that's when you tend to get the best result. So if you are in this just for a short period of time, then you will most probably lose money. But we've always taken that longer term approach. With everything that's coming, to answer your question more specifically, with everything that's coming down the track, everyone's going to have a view in terms of interest rates and what they're going to do. And for us, a lower interest rate environment is actually quite good from an equity valuation point of view. It's very good for long duration assets, which is where we are positioning ourselves. So that's a growth asset, a US textile asset. Now, yes, they do look overvalued. They're always going to look overvalued, I'd say, until they start driving returns or getting the sort of earnings that the market's expecting. But they are, unlike previous times such as .coms and whatnot, these businesses are extremely profitable. So our view is we need to stay the course with those. So that's where we're positioning our customers. We have done for quite some time. We don't see that changing, but there's going to be periods there where the market will pull back. We see that as an opportunity. We don't see that as an encumbrance to our clients.
Mm-hmm.
I think the other thing is the importance of having a plan and a strategy. We see a lot of people out there that just do not have a plan or a strategy in place.
Really?
Right? Yeah. So you sit in front of someone and you ask them some questions. Look, what are you trying to do? And quite often, the response is, "Oh, I'm trying to make money," right? And Brett and I sort of look at each other and say, "Well, it's almost like saying I want to go on holidays and have fun." It's a given, right? You don't invest to lose money.
Mm-hmm.
So how do you formulate a strategy? And it just involves, taking a bit of a breath, right? Sitting down and trying to define exactly what you're trying to do. And then the strategy is how you get there. It's that roadmap, right, of what exactly you do to achieve some of those things. People don't do that effectively enough. And what you find is that after a while, it's like a spaghetti bolognese. You end up with stuff everywhere, right? And I'm sure at different stages, look, I've done this myself, and then you go through this massive clean out, right? And then that just allows you to reset. But from an advice point of view, just slow down, be strategic in your thinking, right?
The amount of times now we've had clients come to us and they just straight away they give us the portfolio. What do you think about my portfolio? And from our point of view, that's question number 99 out of 100. You've got a 99 questions you need to ask before you talk about what should be in your portfolio. And so people, when you're talking about we need to reverse engineer it, that's what we're talking about. So many people take that very end point, what should be actually in the portfolio, that's the what, right? We're coming from why, and the why is the questions from 1 to 99, and then from 99 and 100 is what goes in there at that point.
Yeah.
And that the investment part becomes really easy once you do that.
Yeah, yeah. The reverse engineering, it's important.
Yeah.
Where do you want to be? And let's work backwards from there rather than go, well, I want to make some money. Well, of course you do. Everybody does.
Well, we haven't answered your question yet in terms of where we see the business in 5 years either. So I'll start with that. So we had a view of what we wanted to build was a wealth management business. So when we started it, we jettisoned everything, and Nav briefly touched on this. So insurance, broking, derivatives, corporate, the whole lot went, and we started bare bones just with wealth.
And we had nothing.
And we did generally had nothing. But where we see it we think we can get pretty close to where we want to be in. I don't know whether we want to give the number, do we? We always said we don't disclose what our FUM is.
Numbers the number, but look, it's not really about a number, right? The number will take care of itself. Coming back to the sort of a similarity between a portfolio and investments and returns and stuff. So from a client point of view, we're very narrow. Today we look after about 70, 75 clients roughly. They are generally wholesale clients. We've got close to about 8, 9 key family offices now. We didn't have any when we started this. So from what the business looks like in 5 years' time, we'd probably like to have maybe 20 family offices from a client perspective. We
150 clients in total?
150.
You think we can effectively manage that as the two of us?
Without sacrificing the strategy and that personal touch that you've
correct.
spoken
I mean,
about.
a lot of that really just comes down to time management for us.
Look, the other thing, and we're not trying to be all things to everyone either. We're not so precious like some of the firms. Again, if you walk down Collins Street to go, you need a minimum of $5 or $10 million to do business with us. We're not. It's not about that.
We're competing with a lot of those clients and we're winning those clients. And the reason is they're saying, well, I don't quite meet that threshold. But geez, I've still got $2.5 million. Why can't I get service at these places?
Yeah, but it goes further too.
It goes a lot further.
Because it's the same, right? You're not getting a distinction between
coming back to our service offering again, which we've sort of walked through. But a lot of those guys and we didn't want to talk too much about competitors, but now we've sort of broached that topic. A lot of it is a cookie cutter approach. So you come in there as a client with your $5 million and you are essentially your risk profiled, and then that is put into their in-house structure. So you're a growth client, you'll get this particular portfolio, and this is how we're going to cut up your $5 million, Nick, and that's it.
And there's also layering as well in terms of fees. You're fund to fund, so they will, there's a whole host of things which we don't agree with about the industry. It is the industry. It is the way it is. But for us, we see that as massive opportunity for us.
It's an educational piece for clients.
So
there is another offering that is available to you without having that cookie cutter.
Where does it get to where it's not economical for you to be able to deliver value for somebody though? So, for anybody listening to this going, okay, I really like the philosophy and the values and what they're doing. Somebody comes to see you and they say, listen, I've got a couple of $100,000, I want to try and invest. Do you talk to them? Do you help them? What do you do? What's the advice you give that person?
We do help them in the sense that if they're not the right sort of client for us, there are plenty of colleagues that we have in the industry who specialise in different things.
Yep.
And so we will try and recommend, one or two or three people that can help them. From an economic point of view, look, maybe about a mil would be about the minimum. And the reason we say that is it's to get scalability, right? We can do a lot more in terms of scalability and get the traction that you need and implement our process as opposed to $100,000. And also from a fees perspective, I won't go specifically into our fees, but it's uneconomical when you're dealing with smaller amounts as well. Yeah. So there's a whilst we don't have a hard and fast minimum to say unless you've got $5 million you can't be a client of ours. There are certain things that will dictate what that minimum is at the end of the day.
It also comes back to the wholesale regime as well. So many of the products, not just the products, but the services and the solutions we can provide for people are actually based around a wholesale definition, if you will. And so you really can't provide that to a client that's got $200,000.
Yeah,
because they just don't qualify as under that regime. So it makes it very difficult.
Yeah. Guys, great chat. Thank you. I learned a lot too. We could sit here and talk all day, but it's a real pleasure. I love what you're doing, and I've experienced a lot of what you spoke about in terms of the cookie cutter approach. It frustrates me, even with my super man, my self-managed super. They're notoriously conservative, and that's fine. But when they sent me out the package, I said, I'm mid 40s, late 40s now. I don't. Yeah. I'm looking for a bit more risk. I've got a bit more risk appetite than what you. It's not really, but we can, and so they and to their credit,
come and talk to us, Nick. I think.
Yeah.
But the other thing, Nick, is being growth oriented is not being stupid.
No, that's right.
You don't have to be. Right? There are ways to go about it where you can mitigate risk but still be assertive in your approach.
Yeah.
And it's being able to measure risk as well. And I know that we haven't even spoken about that, but we know exactly where our portfolios are at any given point in time. So in terms of the volatility we're taking on versus the risk of that portfolio and the return we're generating, you ask your person who you're talking to, how do they actually measure that? And I'd be surprised to see if they can actually point that down to a number. So we know exactly where we sit.
Yeah, brilliant. Well, we'll put a link in to Finex Wealth's website. They can reach us. Someone can reach out to you in the comments below where we post this out. If you like the content. You got something out of it, you think somebody else can learn, or you just want to reach out to these guys, like, comment, subscribe, share it with somebody. It costs you nothing and it means the world to us, and we really do appreciate it. See you next time.
Thanks for having us.
Good on you. Thanks, Nick.
Cheers.
If you enjoyed this episode, be sure to subscribe and leave a review. Share it with others who are passionate about healthcare and business. Stay tuned for more incredible stories and insights in our next episode. Until then, keep pushing boundaries.
Thanks for tuning into the Australian Business Show. If you found value in today's episode, be sure to rate and review us on your favourite podcast platform. Hit that subscribe button and stay connected with us for more groundbreaking stories, actionable insights, and game-changing tactics designed to fuel your business growth.